Hello, everyone. Another fund manager video with with myself today. Today, I've got the huge pleasure of bringing to you Randall Dishmon. Randall is the manager of the Invesco Global Focus Fund. Now, there's a lot of global funds in the marketplace. There's a lot of global funds, global equity funds available to retail investors. So, straight off the bat, Randall, what makes your approach, what makes your fund, what makes you different?
Well, yeah, a lot of things. Again, like I said earlier, keep in mind, this is just my opinion. I don't spend any time looking at what other people are doing. And so my experience has been that that alone makes me different. I don't look at a benchmark. I don't look at the category. I don't think about countries and sectors. I view this as being in the business of making money with money.
Hmm.
It's not about competing with an index or competing with a category full of other people. Bottom line is people come to us because they don't have enough money. And so job number one is get them over the goal line.
Hmm.
Um, I go out and look at the whole world and try to find the best 35 to 45 ideas I can find to get job number one done. And I put those ideas together in a portfolio in a way that makes sense, that balances risk and reward. And those are really all the things I think about. I don't think about other people, I don't think about the market. I didn't come from finance. I'm an engineer by training and had a real career as an engineer.
Hmm.
When I first showed up in finance, I found a bunch of people that were kind of all looking at each other, trying to figure out what everyone else was doing, and that didn't make a whole lot of sense to me.
Hmm. Hmm. So, am I right in thinking that you're looking for quality companies? It's about bottom up rather than top down in a world where currently top down seems to be the talking point.
It's completely bottom up, and I think that flows from where I've come from. I spent 14 years as an engineer inside real companies solving real problems. The financial world was always a bit mythical to me.
Hmm.
To take two companies and reduce them to a series of numbers and then compare them made no sense because you really what matters inside companies are in the guts, are in the how they're organized, are in the way they do things, are in advantages are found inside. They're not found by reducing companies to a series of numbers.
Hmm.
And so I try to get as deep into a company as I can and work my way out. So it's completely bottom up. And like I said, I look at the world as one stock market. I find the best ideas within that market I can find, and I put them together in a sensible way. And sometimes those ideas come out 50, 60% in the United States. Sometimes those ideas come out 50, 60% elsewhere in the world, but they fall wherever they fall.
Yeah. How much does valuation play in your approach? Because the reason why I ask is your performance has been fantastic, during 2020. But there are some stocks that are quite highly priced at this moment in time.
Um, Valuation's everything. You know, you might look at the fund and mistake me as a certain kind of investor. You might use labels like growth or something like that. Um, People that know me know that for 20 years I've been telling people I hate labels. Labels are the enemy of good investing. Uh, Labels are excuses. I'm a growth investor. Well, the opportunity was in value. I couldn't get to it. Or I'm a value investor. Well, the opportunity was in growth. I couldn't get to it.
Mhm.
I'm a global making money with money investor. If there's an opportunity out there, it's my job to figure out what it is, where it is, what the risks are, and to get as much of it as I can for my shareholders.
Mhm.
So extremely valuation sensitive. I consider myself a value investor, oddly enough. Um, there are three things I have to get right. The most important of those three things is at what price can I buy this advantaged company? Price is everything. And the reason why it's everything is this. I don't care what you call yourself. You can call yourself an international investor, a small cap, a growth. It doesn't matter what label you want to put on it. Any great investment made in history by anybody started with one thing in common, and that is buying something for less than it's worth.
Hmm.
And so you better know when you're looking at a company what it's worth. There are two keys to doing that. You have to value business reality, which is not always on the income statement. And two, you have to take market sentiment and emotion out of your valuation. Otherwise, you get taken out in markets like the fourth quarter of 2018 or like back in March. If you've based your valuation on market sentiment, when market sentiment changes, you're in for a world of hurt. And so you've got to find ways to value companies that can withstand changes in market sentiment. And I've spent my whole career doing that.
Looking back at March, how has the portfolio fared during the pandemic, and have there been any considerations with regards to, coronavirus 2.0 that obviously we're going through in the UK and globally, certainly in the Northern Hemisphere?
Well, one of the things that helped me. So let me just sort of give you the lay of the land before, through, and after COVID. So before anyone had heard of COVID, I was about 1,000 basis points up
Hmm.
on everything else. I went down less during COVID, and some of the decisions I made during that stressful period in March and April, I came out. I went in 1,000 basis points ahead. I came out 3,500 basis points ahead. The reason why I was ahead before and didn't go down as much is really related to the nature of what I buy. Um, I buy things that are more structural in nature. Um, and by that, I mean, the opposite of structural to me would be cyclical. I don't really think in cyclical terms. I don't look for cyclical things like one year people wear orange sweaters, the next year they wear blue sweaters, right? That's a cyclical kind of thing. Or now we're in a boom, 2 years from now we'll be in a recession. That's a cyclical kind of thing. This kind of structural things I think about are things like e-commerce.
Hmm.
You don't use e-commerce for 2 years and go, hey honey, you know what, let's go back to the store. It's not a cyclical thing. It's changing the way 2-3 billion people around the world conduct their daily lives, and that doesn't mean revert. So all the growth versus value mean reversion talk out there, I think it's fine if the underlying change is cyclical because it's a cyclical idea.
Hmm.
But structural things don't separate the world into growth and value. They separate the world into winners and losers go bankrupt. So you kind of better know the difference. The reason why, again, short answer, I didn't go down as much during COVID, I didn't go down as much during the fourth quarter of 2018, is because I focus on more structural things in nature and they don't get derailed. They might slow down,
Hmm.
but they keep going.
Hmm. And what are some of those structural stocks that you've been investing into? What have been your winners?
Well, I look at the world through the lens of my own life, and I'm fortunate in my job to be able to talk to a lot of senior executives like CEOs and CFOs,
Hmm.
so I can see the world through their eyes. And I try to figure out how the world is changing on a 5, 10, 20-year basis. And then I figure out what advantages are necessary to be on the right side of that change, because there's a winning side and there's a losing side.
Hmm.
Um, E-commerce is something I've been watching for 25 years. I bought my first book on Amazon in 1997. My friends thought I was completely stupid, but I was studying the business model to understand it. So, Amazon's been a big winner for me, not just in the past year, but in the past several years. Things like Zalando, which is a European e-commerce company that is a very well run and very well constructed company. So e-commerce has been meaningful. Uh, Digital payment as a form of payment has been taking share since the 1950s. The first credit cards came out in the 50s. Back then, if you used a credit card, it meant you were incredibly wealthy because you couldn't even get a credit card unless you were wealthy. Then in the 70s and 80s, you could get a credit card, but if you used it, it meant social attitudes toward that, where it meant you couldn't afford what you were buying. And
Yeah.
so it's funny to watch social attitudes change. Even 20 years ago, I'm willing to bet neither you nor I would have bought a bag of potato chips and a bottle of water with a credit card. But I bet today you would.
Yeah.
And so social attitudes about the use of digital currency has changed dramatically. And it's only about 50% penetrated.
Hmm.
2, 3, 5, 10 years from now, no one's going to carry cash. And along comes COVID, and suddenly money is actually dirty. It is actually dirty,
Absolutely.
but you've never been more aware of it than post COVID.
Hmm.
Things like PayPal. I own MasterCard and I own PayPal. Both of those are in the midst of structural change.
Hmm.
And the move to the cloud is another big area of structural change that people have missed, people continue to miss for understandable reasons. But it's one of the biggest structural changes of my adult lifetime. And it's very, very early innings and has a long way to go.
Yeah. Moving moving to right today. I can't talk to you without mentioning the current situation with regards to the US election. How do you? We've seen some phenomenal reactions in the last couple of days. Today, I look at the futures market, and again, you're looking at huge numbers on the open. How do you think that the current situation, and assuming a Biden victory with the Senate retaining the Republican bias, how do you think that's going to change the market, if anything?
You're well informed. I do assume a
I've got
Biden victory.
CNBC on there. I saw there.
Well, if it's CNBC, you should mute it because most of what they talk about is not relevant. Not going to make you better. Um, I, I think most events like that are irrelevant.
Yeah.
They might be relevant to the market, but I don't buy the market. I buy a highly curated list of the best ideas I can find. Um, I've been through lots of elections at this point as an investor, and I'm not yet seeing the one that mattered, even the ones where the House, the Senate, and the administration all went in one direction.
Hmm. Hmm.
So, the way I think about it from an investment point of view is things should change slowly. Systems should be designed to be inertial. Like governments are meant to be inertial, right? They don't change quickly. And so, with a Republican Senate and a Democratic administration, inertia is pretty much a guarantee. And I'm okay with that. And you can see that the market's okay with that as well.
Yeah.
And
Yeah.
it's the right interpretation. The market's got the right interpretation of what just happened.
Yeah. Yeah.
Not that it matters to what I do long term.
Well, that's a good approach to have. Certainly a lot of managers are hitting themselves up in arms about things, and yeah, you can't. I feel like it's standing at the beach and screaming at the tide not to come in. It's a bit pointless, really, to be perfectly honest.
Well, it is pointless, and I'm not saying that there's any brilliant insight on my part. I was lucky early in my career to fall into the hands of people who really knew what they were doing.
Mhm.
And one of the things that I was told 20 some odd years ago is there are a million things you could think about and know and focus on, but usually there are only a few things that matter. You want to be a good investor? Figure out what those things are and make sure you know those things better than anybody else. And I've spent my whole career spending 95% of my time focused on those things that matter
Mhm.
and not much else.
I think that's a fantastic soundbite to end on, Randall, to be perfectly honest. It's been an absolute pleasure to talk to you. I'm sure we will talk again. You keep doing what you do because it obviously works. But thanks once again for spending this time.
Thanks for having me. I love what I do. And so I'm going to keep doing it.
Magic. Cheers. See you, Lou. Cheers. Bye.
Cheers.